Okay, good afternoon, everyone. Thanks for joining me here in this wonderful Wednesday. The topic of my presentation today is how to build a World Cup winning investment portfolio. Essentially, a lot of investors may not know where to start when they're building a portfolio. In today's presentation, I'll be sharing a simple yet effective method of building an investment portfolio by taking some cues from past World Cup winning teams. And without further ado, let's start the presentation. First of all, why do footballers play football? So the main goal ultimately is to win the World Cup, correct? Why they want to play football? To win the World Cup, which is the ultimate prize in football. Similarly, why do investors invest? So similarly, why do investors invest? Basically, they want to achieve their financial goals. Correct? And to achieve financial goals, basically, you need, similar to football, in order to win the World Cup, you need to have a team of players that play together cohesively as a team and to defeat the opponent. Similarly, to achieve your financial goals, you need a portfolio of assets, a diversified portfolio across different asset classes, geography, and sectors in order to achieve your financial goals. But if we were to, okay, sorry, give me a moment. Okay, yeah. So back to my point, why do investors invest? Essentially to achieve your financial goals. It could be for travel, for education, for retirement, or for health, or even to buy anything. So everyone has their own financial goals. And ultimately, how we achieve that? Yeah, um, we have to have some strategy. So to win a World Cup, ultimately you need a team of players, and each player has a role to play in the team. You have your attackers, your strikers, which are normally the number 10s. You have your midfielders, whose goal is to help the attacker and also help the defenders protect the goal. You have your defenders, which is normally the last line of the line of defense, we call it, and their job is to protect the goalie, the goalkeeper, and ultimately the last line of defense is your goalkeeper, whose only job is to protect the goal. Okay, so each player in the team will have a role to play, and you have to play as a team in order to win the World Cup. Similarly, in order to achieve your financial goals, you need a portfolio of assets. Each asset has their own role to play. Your equities, they generate the capital gains, your dividends, your bonds, they generate the coupons, the interest income for you, and the cash is as a buffer to protect your overall portfolio, for example. So another perspective to take in terms of your portfolio, rather than the typical pie chart that you see over here, you can also think of your portfolio as a team of different assets. Okay, you have your attacking assets, which are normally, okay, maybe firstly we start with the goalkeeper. The goalkeeper of your portfolio is usually the safest pair of hands. For example, like short duration bond funds. So they are the asset that give you a bit better than FD interest while protecting with very low risk, essentially protecting the capital of your portfolio. Okay, then slightly above your short duration bond funds, your goalkeepers will be the defenders. the defenders of your portfolio, which are normally bond funds. So bond funds entail slightly higher risk compared to your short duration bond funds, but they give you the additional yield pickup, the additional returns for a portfolio, while also buffering your portfolio during market volatility. Okay, bond funds are the buffer for your overall portfolio. Then you have your midfielders, which are in between the attackers and your defenders, which are normally your balanced funds. The balanced funds are the mixed asset funds that have your equity and also the bonds in the portfolio, and also the core equity funds. What are core equity funds? They are equity funds that form the core of your portfolio. Similar to like football team, you have the core players in the midfield that are essentially the bridge between your attackers and your defenders. Okay, and finally you have your attackers, which are normally the number 10s, and these are in your portfolio essentially the tactical funds, which are the ones that give you that help you score the goals, to help you generate the most returns. But you cannot just play with a whole team of just attackers, right? No World Cup winning team wins with just a whole team of strikers. You also need your defenders to protect the goal. You also need your goalkeeper and the midfielder as well to protect as a bridge between the attackers and defenders. So similarly, your portfolio works the same way. You need to have a balance between attacking and also defending your portfolio. Later on, I'll talk a bit more on how you can do that. But the basic concept is, in order to achieve your financial goals, you need a diversified portfolio of assets to help you do that. So how do you determine which fund plays which position in your portfolio? So in the football team, normally the goalkeeper, the number behind the back of the goalkeeper is number 1. Okay, and your defenders normally are 2, 3, 4, and 5. Then you have midfielders from 6, 7, 8, 9, 10, for example, and the attackers are number 10. So normally your more defensive-minded players, their numbers behind the back are lower, smaller numbers, whereas the attackers, like your strikers, are number 9, number 10, number 11, for example. So similarly in the portfolio, how do you know which funds are your attackers, which funds are your defenders? We do have a simple chart to help you with that. In IFAS, we have this risk rating thermometer, as you can see here. So we rate the funds, the unit trust, based on their risk rating, that we think the lowest risk will be 0, 1, and etc. And the funds with the highest risk will be those number 9, number 10. Okay, as you can see here. So typically the money market funds, the short duration bond funds, or the Malaysian bond funds are the ones rated 0, 1, 2, and etc. The balanced funds will be the one 5 or 6 in the middle. And then the more aggressive single country equity fund or single sector equity fund, like your technology fund or your China fund, those will be the single country China funds will be the rated 9 or 10 funds. Okay, so you can use the risk rating as a gauge to see how you want to position your portfolio, or what players you want to put inside your portfolio based on the risk rating. How do you find the risk rating of the fund? In the fund fact sheet itself, you can see the risk rating of individual funds. For example, in this case, Aberdeen Islamic World Equity Fund, it's a global equity fund. It's a risk rating 7. So risk rating 7 is sort of your midfielder of your portfolio, okay, because they are the core equity fund of the portfolio. They are not very volatile like the 9 or 10s, but they are not the defensive like 1, 2, 3, 4 that you see as well. So it's the midfielder of your portfolio. Another place you can see is the fund selector. Under the fund selector tool, you can also filter the funds by the risk rating. Or if you filter the funds, you can see the risk rating in this part of the fund selector, the fund info part, the risk rating over here. So essentially, it's an easier way for you to filter out, like, okay, I'm looking for risk rating 1 funds, risk rating 2 funds, 5, 6, and etc. You can do it through the fund selector over here. Okay. Now, in this screenshot basically is how the fund selector looks like if you wanted to filter based on risk rating. Like, okay, I'm looking for a risk rating 10 fund, my strikers of the portfolio. So I just click 10, and then they'll list out all the funds that are rated 10. Okay. Now I move on to how to build a World Cup winning portfolio. There are a few steps, simple steps, but they're very applicable to your portfolio building. the first thing you need to do is to determine the team's formation, correct? Because ultimately, depending on the opponent and situation, you need to arrange your team accordingly. The most commonly used or most famous football formation is 4-4-2. Probably a lot of you have heard before. So here I have this example. This is Italy's 2006 World Cup winning team. Okay, you can see a lot of stars over there, but they typically play with a 4-4-2 formation. 4-4-2 means 4 defenders, 4 midfielders, and 2 attackers. Okay, in this case, some of these names are the very famous names like Francesco Totti, Luca Toni. These are the attackers. But you also need the midfielders like Pirlo or Gattuso to sort of pass the ball down to the attackers, right, to create opportunities over there. And the defenders, these are like world-class defenders to help defend the goalkeeper. So essentially, this was the World Cup winning formation by Italy in 2006, and they use a 4-4-2 method. So from portfolio point of view, what is 4-4-2? You start with 4 defenders. Okay, ultimately you need to have a goalkeeper, the short duration bond funds, which are the lowest risk kind of yield generating funds. Then on top of that, 4 bond funds. Then on top of that, 4 balance and core equity funds, and then 2 tactical funds. So 4-4-2. So how does it look like in portfolio if I were to do something like that? So here, similarly, I have chosen 1 short duration bond fund, the M Income Plus fund. I've put equal weights for all of the funds, 1,000 ringgit each, to come up with a portfolio worth with an investment capital of 11,000. But you can adjust accordingly. But the idea is sort of like this. We start with 1 short duration bond fund, which is your goalkeeper. Okay, then 4 bond funds. Here I've chosen the bond funds which are rated 2, 3, 4, and 5, like essentially. Then 4 balance funds, Principal Asia Pacific Dynamic Mixed Asset Fund, Aberdeen World Equity, Principal Asia Pacific Dynamic Growth, and etc. 4 balance or equity funds. So similarly, I chose them based on the risk rating, number 6, 7, 8, and 8. And 2 tactical funds, which are the more aggressive funds, the strikers of the portfolio. Here I've chosen a Malaysia Small Cap Fund, Tough Vision Fund, and Manulife Global Aqua Fund, which is a global equity fund that invests in water-related ESG assets. As you can see here, by putting all of these together in an equal weightage, I have come up with a balanced portfolio. In fact, 50% equity, 50% bonds. So it's quite a balanced kind of team that you use to, similar in a football sense, is like a balanced team approach. In terms of portfolio diversification, by putting these assets according to this, you get a quite decent diversified portfolio. As you can see here, you have allocation across Asia, you have global Asia, ASEAN, Malaysia, global bonds and Asian bonds, and also Malaysia bonds. So essentially, you have a balanced portfolio, a diversified balanced portfolio. And based on the track record of these funds, we back tested this, and yeah, you can see that in the past 4 years, they have generated about 7% per annum return in past 4 years with a volatility of 7.9%. Okay, so essentially, by using this Italy World Cup 4-4-2 kind of methodology or team formation, you can actually build a balanced portfolio that has moderate risk, 7.9% volatility with a moderate kind of return. Okay, if you're looking for something balanced, stable, 4-4-2 is a good place to start. There are also other formations. For example, like this is France 2018 World Cup winning team. So this is an attacking minded formation. You can see here they have 4, there should be 3 tactical funds, but essentially they are running on a 4-3-3 formation. Okay, there are 4 defenders, 3 midfielders, and 3 attackers. Okay, and if we were to employ this strategy in a portfolio, right, it's a more attacking minded one. That means similarly, we have 1 goalie, the short duration bond fund, 4 bond funds, but this time around, instead of 4 balance or core equity funds, I only put 3 balance or core equity funds and 3 tactical funds. This time around, I added the TA Global Technology Fund, which is that invests in global technology, which it's because it's a single sector fund, so the volatility is higher, the risk level is higher. Okay, but by doing this, right, you can see that the overall portfolio in terms of the portfolio allocation is still 50-50, 50% equity, 50% bond. But I've switched some of the core equity to this single sector technology fund, and the volatility of the portfolio has increased. It is now 8.3% compared to 7.9% before. Okay, just by doing this small switch, you switch from a low, like a rating 8 fund to a rating 10 fund, right? The volatility is higher, the risk is higher, but the potential return is higher as well, 7.4% per annum in the past 4 years. Okay, per annum in the past 4 years. You're taking on a bit more risk for a bit more potential return. So France's 2018 World Cup winning team 4-3-3 was a bit more aggressive, a bit more attacking minded compared to Italy's 4-4-2 formation. Okay, so if you are a bit more aggressive, you can consider 4-3-3 formation as well. There's also this Brazil 2002 World Cup winning team, as you can see here. They were running on a 5-3-2 formation, so quite defensive minded. 5 defenders, as you can see here, Roberto Carlos, Cafu, Lucio, all these people, world-class players at the time. 3 midfielders, Ronaldinho, Gilberto, and then 2 very famous strikers, Ronaldo and Rivaldo. So they played with a 5-3-2 kind of strategy in their 2002 World Cup winning team. So how can we apply this to an investment portfolio? So similarly, 5 defenders they use. So here I use 5 bond funds. Okay, a bit more defensive minded, and then 3 balance and core equity funds and 2 tactical funds. So how does the portfolio allocation come out as? Essentially, is a 59% bond fund, bond allocation, and 41% equity. So it's slightly lower risk compared to the 4-4-2 formation. Okay, but what you get by putting in more bonds, right? You're taking a more defensive approach. Your portfolio volatility is also lower, 7.1%. Okay, you take away some of the equity fund, the midfielders, you put in more defenders, your portfolio volatility is lower. Just now it was 7.9%, right, for the 4-4-2 formation. Now it's 7.1% lower volatility. You sacrifice a bit of the return. The total return in the annualized return in the past 4 years, 6.7%. But yeah, you're going in with a more defensive-minded portfolio with lower risk, and you probably can sleep better at night. This will be suitable for some investors who are a bit more conservative, less aggressive, for example. Similarly, you also get a diversified portfolio across different regions, as you can see here, global, Asia, Malaysia, and etc. After you have determined the formation that you want to do, whether you want to go for a balanced approach or you want to go for more attacking or more defensive approach, the next thing to do is to choose the best player for each position, correct? So at Fund Supermart or FSMOne, we do have a list of recommended funds which we pick, okay, for each category that based on the criteria such as performance, such as risk, and also expense ratio. We have filtered down the 700 plus unit trusts on our platform using our methodology to come up with 44 recommended funds. So this is a meticulously curated list of funds, and you can easily find this list of funds under the recommended fund category. You can click here and click under recommended funds. You can also find details about individual funds, why we choose this fund, how has this fund performed compared to the benchmark of peers. And there's another way, which is through the fund selector. You can also look for this R logo. Okay, so those funds with the R logo will be the recommended funds for each category. Okay, I've also listed the recommended funds here for easier for your convenience. And essentially, if we look at the short duration bond funds, which are the goalkeepers of the portfolio, our recommended fund will be the M Income Plus fund. Okay, for fixed income funds, the defenders of a portfolio, I actually split it to central defenders and also the winger defenders, the left backs and the right backs over here because of the risk rating of the individual funds. So the central defenders normally are like number twos or number threes, for example, like CAF Bond Fund, Manulife Investment Bond Fund, Amanah Raya Share Trust, etc. Then you have your defenders, which are number 4 or number 5 rating, which are your global bond funds and Asian bond funds, because they are a bit more aggressive because they do entail some currency risk, but outside of Malaysia, there could be some higher yielding opportunities that can be tapped into. Okay. Here I also have a recommended balance and core equity funds for your perusal. So I've split similarly defensive midfielders, which are the rating 6 players, and then the other midfielders like your wingers, which are rated 7 or 8, as you can see here. So so essentially, if you were to pick like, okay, I pick one from number 1, one from number 2, number 3, number 4, then you could come up with a portfolio similar to what I've done just now, which I've shown you just now as well. In terms of attackers, now we come to the attackers. Your number 8, 9, 10 would be the more aggressive risk rating, higher risk rating kind of funds, and those are your attackers. And typically, we don't recommend to put too much of all these higher risk rating funds in the portfolio because, like I said, if you were to put too much of these funds in the portfolio risk level will go up, the volatility of the portfolio would go up. It's better to have a balanced portfolio or something that has a combination of the previous some of the bond funds and some of the balance funds or core equity funds in your portfolio to balance out the risk level. So the tactical funds are also something that you tend to switch around as well. Okay, so the core ones are the mainstays of your portfolio, but the tactical ones are something that you add on if you see opportunity over there. Like, okay, I see more opportunity in China, for example, so I put on the China fund, the China player, for example, or I see opportunity in global technology, then I swap the China fund with a global technology fund. Similar to football, right? If you want a striker that can run very fast, or you want a striker that can hold the ball better, or some skillful strikers, so you would switch the attackers or the tactical funds based on the scenario, based on the opponent or your tactics. Okay, so hopefully that gives you a better idea of how to go about in terms of crafting your portfolio using a simple methodology of how football teams are being made. Number 3, so the first one is to determine your formation. Then you choose the best players, the best funds for your portfolio, for your team. And the third one is to adjust your strategy. So along the lines that I mentioned just now, after you have set your formation, you also need to adjust based on the market situation, based on the opponent as well. So Brazil, I showed you their 5-3-2 strategy, right? Just now, a defensive-minded one. But if the situation changes, right, they need to score goal. They think that the opponent is not as strong. Okay, if let's say they face a strong opponent, they will have a more defensive formation. But if let's say the opponent, they think there's opportunity to take, they can score more goals. They can go on to a 3-4-3 formation, as you can see here. They are the same players as just now, but a bit more attacking minded. So 3 defenders like Rocky Jr., Lucio, and Edmilson. Then the 4 attacking, the wing backs essentially become like wingers already, and there are 3 attackers: Ronaldinho, Ronaldo, and Rivaldo. So this is a very attacking minded team that Brazil could play if they needed to. Okay, so similarly, if I were to do this for a portfolio, rather than having 4 bond funds or 5 bond funds, I cut it down to 3. Okay, so 3 bond funds, 4 balance or core equity funds, and 3 tactical funds, right? So notably, you have to note is that by doing this, your equity portion of the portfolio goes up. Now it's about 59% in equity, 41% in bond. The portfolio volatility also will go up. By doing this, your portfolio vol is 9% compared to 7.1% or 7.9% before. So you have to be cognizant of the risk that you take by doing this, 9%. But if you put more attackers, ultimately the goal is to score more goals, and the potential return is there. Okay, by doing this portfolio, the 3-4-3 formation, right? the annualized return in the past 4 years is about 8.5% per annum. Okay, so what I'm trying to say is that, yeah, you have a probably a formation that you start with based on your risk profile. Okay, I'm a more conservative investor. I want to have more defenders in my portfolio, or I'm a more moderate investor. Then I go for 4-4-2 kind of portfolio. But if I'm an attacking minded one, 3-4-3 could be an option, for example. So and also you adjust based on the market situation. If we think that okay, market's gonna be like let's say recession is coming, okay, equity may not do as well, then maybe I should tone down a bit of my equity portion so I become more defensive, I put in more bonds, okay? Or I think the market is a bit more volatile, I put in more defenders, I put in more bond funds, take down some of my attackers. Or you can think of it another way. Let's say I have already achieved my returns. Let's say at the start, I have scored good goals, okay? I scored a few goals, my profit has gone up in terms of my portfolio. Maybe I think the markets have gone up quite a bit. I want to take some profit, so I switch some of my tactical, my attacking player to defensive one. Then when there's opportunity again, then I swap again my bond funds, my defenders. I swap into tactical funds to capture the market rebound, for example. So if you think of your portfolio from a footballing point of view, it's also another way, another perspective that you can look at. And I've given you some examples of how you can actually craft a decent portfolio by using this methodology. How many bond funds, how many balanced or core equity funds, how many tactical funds in the portfolio. So today you have learned about how past World Cup winners have crafted their portfolios and won the World Cups accordingly. 2022, who will win? I think strategy is also very important. Other than having a good place, the strategy, how you position your portfolio or position your team against the opponent is also very important to win the World Cup. So now you have learned how past winners have done it. Now you can go and win your World Cup, essentially. Thank you. That's all from me. I believe there are some questions over here. If there are no questions, then we can end the telcon. I hope that was an insightful session for you. A simple yet effective and also you can say relatable method of building a portfolio. Yeah, so having a starting formation, putting in the best players for each position, and then adjusting your strategy according to the opponent or market situation. Okay, so hopefully this was an insightful session for you guys. I don't think there are any questions, right? If there are no questions, then we can probably end this. Thank you very much.